In May 1989, the Bank of Japan committed economic murder. Not with guns, not with bombs. With a pen stroke on a policy document, they raised interest rates from 2.5% to 6% over 15 months, from May 1989 to August 1990. And in doing so, they didn't just pop a bubble. They cremated the wealth of 120 million people. $5 trillion evaporated in 2 years. Pensions, gone. Savings, gone. Dreams, gone. But here's what makes this a horror story. The massacre didn't start with raising rates. It started 40 years earlier with the opposite, with rates so low, so artificially cheap, that they turned an entire nation into gambling addicts. By 1989, Japanese real estate was worth more than the entire United States. A country the size of California somehow had land values exceeding all 50 American states combined. Every economist on Earth knew it was insane. Every banker knew it would explode. But nobody stopped it, because buried in a 1949 document from the Allied occupation, there was a clause, a tiny bureaucratic sentence that said the Bank of Japan must prioritize employment stability over price stability. 7 words. That's all it took. 7 words that gave politicians permission to keep rates low forever. 7 words that bankrupted 3 generations. This is the story of how the dumbest monetary policy in history destroyed the world's second-largest economy. And why your country is copying it right now. To understand the criminal stupidity of what Japan did, you need to feel the suffocation of the trap. Picture this, it's 1985, you're 28 years old. You just got promoted to junior manager at Mitsubishi. You're making decent money, about 4 million yen a year. You want to buy an apartment in Tokyo. Your real estate agent takes you to see a place. It's 45 square meters, about 480 square feet, smaller than a 2-car garage. It's 90 minutes by train from downtown. The building has paper-thin walls. You can hear your neighbor breathing. The price? 60 million yen, 15 times your annual salary. In America, that same year, the average home costs 3.5 times the average salary. In Japan, 15 times, and climbing. Your agent smiles and says, better buy now. Next year it'll be 80 million. Your parents, who survived the war, who rebuilt Japan from ashes, they tell you, son, debt is dangerous. Save your money. But your friends at work, the guys you drink with after the shift, they're all buying. They're taking mortgages for 8, 10, 12 times their salary. They show you the math. The interest rate is only 2.5%. The monthly payment is manageable. And here's the kicker. Land in Japan never goes down. It's an island. They're not making more of it. It's a sure thing. So you do it, you sign the papers, you borrow 60 million yen, you move into your shoebox in the sky. You're a homeowner, you're building equity, you're set for life. Except you're not building equity, you're building a coffin. Because that 2.5% interest rate, it wasn't a market rate. It wasn't based on risk or inflation or supply and demand. It was a political rate. The Bank of Japan, under pressure from the Ministry of Finance, under pressure from politicians who needed GDP growth to get re-elected, they were holding rates artificially low. Why? Because in 1949, when Japan was occupied rubble, American economists wrote a new constitution for the Japanese economy. They said, never again will Japan militarize. Instead, you will manufacture, you will export, you will grow. And growth requires cheap money. Cheap money means companies can borrow to build factories, borrow to hire workers, borrow to export cars and electronics and conquer global markets. For 30 years, it worked like black magic. Japan went from ruins to Walkman, from starvation to Sony, from bicycle to Lexus, the miracle economy. By 1985, Japan was producing half the world's semiconductors. Japanese cars were crushing Detroit. Japanese banks were the largest on Earth. And underneath it all, invisible, metastasizing, was the debt. Mountains of debt. Because cheap money doesn't just fuel smart investments, it fuels stupid ones too. By 1989, Japan had something economists had never seen before. Zombie companies. Corporations that couldn't turn a profit, couldn't innovate, couldn't compete. But they couldn't die either because banks kept lending them cheap money to refinance old debt. Construction companies were building bridges to nowhere. Developers were buying land in remote mountains. Banks were lending money to golf courses, to ski resorts, to real estate speculation schemes that made zero economic sense. Why? Because the money was too cheap not to lend. A bank could borrow from the Bank of Japan at 2%, lend it out at 4%, and pocket the difference. Risk didn't matter. Due diligence didn't matter. The only thing that mattered was volume. Your 60 million yen apartment? By 1989, it's worth 95 million. You didn't do anything. You didn't improve it. You didn't add value. The number just went up, and you feel like a genius. Everyone does. Japan is buying America piece by piece. Rockefeller Center, Columbia Pictures, Pebble Beach Golf Course. The Emperor's Palace grounds in Tokyo are worth more than all of California. And then, on a spring morning in May 1989, the Bank of Japan's governor, Yasushi Mieno, walks into a policy meeting and says, "Enough. This is insane. We're raising rates." And he did. 2.5% to 3.75% to 4.25% to 6% over 15 months, from May 1989 to August 1990. Every economist applauded. "Finally," they said, "Japan is being responsible. They're taking away the punch bowl." But they weren't taking away the punch bowl. They were detonating a bomb inside a house made of debt. Your 60 million yen mortgage, the payment just doubled. The 95 million yen apartment, now worth 40 million. You owe 20 million more than your home is worth. You're underwater, trapped. And so is everyone else. The Nikkei stock index crashed from 38,915 to 15,000 in 2 years. Half the stock market, gone. Real estate prices fell 87% peak to trough. 87%. Imagine waking up and your home is worth 1/8 what you paid. Banks collapsed. Construction companies went bankrupt. Unemployment exploded. But here's where it gets truly, cosmically stupid. You'd think Japan would learn. You'd think they'd say, "Okay, we blew a bubble with cheap money, we popped it. It hurts. Let's restructure. Let the zombies die, let the market clear." Like America did after the S&L crisis, like Sweden did in the 90s. But Japan didn't. Japan panicked because those zombie companies, they employed millions. If they die, unemployment goes to 15%, 20%. If unemployment spikes, riots start. If riots start, the government falls. So instead of accepting the pain, instead of choosing the quick, brutal fix, Japan chose the slow death. They cut rates, not back to 2.5%. Lower, way lower. By 1995, 0.5%. By 1999, 0.1%. By 2001, 0.0. They invented ZIRP, zero interest rate policy. And when zero wasn't enough, when the economy still wouldn't grow, they did something even more deranged. In 2016, they went negative, minus 0.1%. You had to pay the bank to hold your money. Why would they do something so insane? Because they were trapped. The zombie companies were still there. Still drowning in debt from 1989. If rates go up, they die. If they die, chaos. So keep rates at zero, forever. Keep the corpses animated, sacrifice the future to preserve the past, and the trap gets worse. See, low rates are supposed to make people borrow and spend. But our 28-year-old from 1985, he's 60 now. He spent 35 years paying off an underwater mortgage. He watched his savings earn zero interest. He never took risks, never changed jobs, never started a business. He learned the hard way. Debt is death. His son, born in 1990, he grew up watching his father suffer, so he never bought property, never borrowed. He works contract jobs, lives with his parents, saves every yen and earns nothing on it. His daughter, born in 2015, she's growing up in an economy that hasn't grown in her entire lifetime. Zero interest, zero inflation, zero opportunity, zero hope. 3 generations. Lost. The Japanese have a term for people in their 20s and 30s who gave up on career, marriage, home ownership. They call them herbivores. People who consume the bare minimum, who don't reproduce, who don't participate. An entire generation went extinct economically. And the Bank of Japan, still keeping rates at zero, 35 years later, because the trap is perfect. Low rates don't work, so you keep them low longer, which creates more zombies, which means you can't raise rates, which means young people don't borrow, which means the economy stays frozen, which means rates stay low. Forever. Here's the really sick part. In 1995, an economist named Richard Koo warned about this. He called it a balance sheet recession. He said Japan was trapped. He said the only way out was fiscal stimulus plus accepting bankruptcy for the zombies. He showed the math. He showed the history. Nobody listened. Politicians didn't want bankruptcies. Voters didn't want pain. So they chose the comfortable lie. Low rates will save us. Just a little longer. Just one more year. 35 years of just one more year. So what's the morale? Here's the brutal truth. There's no such thing as a free lunch in economics. Every shortcut has a cost. Every trick has a trap. Low interest rates feel like a gift. Cheap money, affordable loans, economic growth. But you're not creating wealth. You're borrowing it from the future. You're stealing from your children. Japan's tragedy wasn't the bubble. Bubbles happen. Markets correct. Pain is temporary. Japan's tragedy was refusing to accept the pain. They tried to spread the agony over 3 generations instead of concentrating it in one. They chose slow death over quick surgery. And the worst part? We're doing it again. Right now. The Federal Reserve dropped rates to 0 after 2008, then again after COVID. The ECB had negative rates for a decade. China is building ghost cities on borrowed money. The entire developed world looked at Japan's disaster and said, yeah, let's try that. Because here's the thing about stupid tricks. They feel smart until they kill you. Low rates pump the stock market. They inflate home prices. They make everyone feel rich. Politicians love them. Bankers love them. Voters love them. Until the bill comes due. And it always comes due. Japan is 35 years into paying. They've sacrificed 3 generations and counting. Their population is shrinking. Their GDP hasn't grown since 1995. They're a living, breathing warning. Don't do what we did. But nobody's listening. Because the alternative is pain, and humans will do anything to avoid pain, even if it means destroying their grandchildren's future. The question isn't whether we'll learn from Japan. We won't. The question is, which generation will you be? The one that borrowed cheap and got burned? The one that played it safe and stagnated? Or the one that inherits the ruins? Someone always pays for the stupid trick. The only choice is when and who. Now I want to hear from you. Drop a comment right now and tell me where you're watching this from. Your city, your country. Because this isn't just Japan's story anymore. It's happening everywhere. Are you seeing it where you live? Insane real estate prices? Companies that should have died but keep getting bailouts? An entire generation that can't afford homes? Tell me. Let's map this disaster in real time. And if this video showed you how one stupid policy decision can destroy 3 generations, hit subscribe. Because every week we're tearing apart another brilliant economic trick that turned into a generational nightmare. This is Collapso, where we expose the stupid tricks behind the smart disasters. See you in the next collapse.